Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Seems to be that time again to check out a couple of more momentum stock picks with Mike Vodicka, our momentum stock analyst at Zacks.com. And here's a company that's been around for a while that you've written about recently, Legg, LM, the ticker symbol. They are an asset management firm.
Yes, they are, and they have been around for a while. They actually were founded in 1899, and we don't come across many companies.
That's a while, yeah.
Yeah, they've been around for 100+ years, so that's a pretty good history they have. It's a fairly decent-sized company, market cap of $4.7 billion, so it's fairly sizable. And like you said, they're really just a pure money management, asset management firm. Mm-hmm. This company kind of plays into what we've seen happening in the financial sector recently, where there's been a big resurgence. There's been a rebirth of investor confidence in these kinds of institutions, and we've really seen that play into their share price. Now, Legg, their most recent reported quarterly results, second quarter, the end of July, they did take a pretty big hit in revenue year over year. It came in at $613 million from $1.1 billion last year. So they did dip, but they did beat on earnings, which was kind of nice. They had earnings of 35 cents a share. It was 14 cents ahead of the Zacks consensus estimate.
So does that give them a leg up?
I guess you could say it does, yeah. But getting to some more specifics related to the results, one of the key criteria these asset management firms use to evaluate their productivity is assets under management. And from quarter to quarter, their assets under management were up 4%. So they did see some nice rebounding right there after kind of suffering a setback last year. Mm-hmm. Moving to the estimate picture here. Current year is currently at $1.23 per share. Mm-hmm. That's trading at 26 times, so that's a little bit pricey, but they do have a fairly bullish next year estimate, projecting 25% earnings growth, so that kind of makes the more expensive valuation a little bit more culpable. And then, of course, moving on to the last piece of the puzzle, the chart. Just like the overall market bottomed out in early March at around 10 bucks, and since then it's crossed the 32 mark. There's some short-term resistance there, but in the meantime, it's more than tripled in price, so pretty big return.
All right, and then this is an interesting name for this company anyway. E-House China Holdings Limited. It's a long name. EJ is the ticker symbol. Real estate brokerage and consulting out of China.
Yeah, exactly.
Didn't know there was much of a real estate market in China to consult on.
Apparently there is, and it's growing quickly. This is a playoff of what's happening in China on a macro level. The country is basically booming. I think their projected 2009 GDP growth is right around 9%, and that's relative to most other countries globally are actually contracting. So they're kind of an outlier in that capacity.
So they must be. Their primary focus must be commercial real estate?
Actually, they do a combination of both commercial and they do some residential stuff too. But the company's been around only since 2000, so less than 10 years, market cap of $1.77 billion. So it's already pretty big, I'd say. And it's definitely a playoff of what's happening off of China. And getting to their actual quarterly results here, to give you an example of how quickly they're growing, the revenue was up 48% year over year. And this is something we've talked about a little bit here. A company showing sales growth, revenue growth. That's pretty hard to come by. Yep. So this company was able to post 48% increase. That's pretty solid.
That's actual firm growth.
Yeah. And then on the earnings side, they posted earnings of 24 cents per share. That was 7 cents ahead of the Zacks consensus estimate. So they have fairly solid earnings production too. They have a decent cash position, $194 million. So that gives them a little bit of flexibility moving forward. From a valuation perspective, the current year is at 92 cents, so it's trading at 23 times. Again, that's a little bit of a premium to the market, but we are talking about a Chinese stock here, so they tend to be a little bit pricier. They've got the nice next year estimate of 26% growth, so the longer term picture is solid too. And then moving on to the last piece, the chart, of course.
Yep.
Again, the stock took off in early March, bottomed out around $6, and since then it's topped off at 24, so it's posted some pretty big gains. These Chinese stocks, they're going to be volatile, but if it's a long-term investment, then they have the capacity to definitely outperform the averages.
All right, do you own either of these two?
No, I don't.
If you're locating this video outside of Zacks.com, get over to Zacks.com's homepage and check out the other Zacks Rank By stock picks in the upper right-hand corner of the homepage. We put 4 new ones up there for you each day for your consideration. With Mike Vodicka, I'm Terry Ruffalo.